Zia Mody joining in. Ma'am, I know you wouldn't want to go into the nitty-gritties, but we are going through the 177-page report. You are a part of the panel. You've just submitted the recommendations to SEBI. What, according to you, stands out in terms of the salient features?
I think there is a much higher degree and focus that the committee felt should be highlighted on the role of the independent directors. I think that there were several issues where related party transactions were relooked at and a bit of squeezing and tightening on that. There was a requirement of some policies to be framed and put in place, like materiality, information sharing, etc. And I think one of the things that we decided was to separate in time to come and give a path forward of the roles of the non-exec chairman and the managing director. So I think that would probably be, the balance was, you know, have we put too much responsibility on the independent directors vis-a-vis the fact that they are the custodians and gateways from the regulator's point of view? Are they compensated sufficiently? Should there be some minimum criteria such that people of quality or people who now would therefore have to spend significant time are appropriately compensated?
Ma'am, we were just going through the board composition recommendations, the maximum minimum recommendation that has come in. Also the point of segregating the role of chairman, MD and CEO. Could you tell us what was the idea behind that recommendation?
I think that, you know, from an evolving market point of view, we are basically saying that these are functions that need to be split, where the managing director is charged with executive duties and the non-exec chairman really has to sit overall and take a higher view of where the company is going and particularly its governance. And so, you know, you needed people with those skill sets and therefore you needed maybe more than just 3 which are there right now. So we sort of tried to broaden the board to 6, so the composition would create diversity in terms of background, professional, gender, etc. And the thinking was that you needed a greater, profound debate and that all this should be brought to bear, obviously, for the benefit of the ultimate which are the shareholders.
Okay. Mrs. Mody, you're looking at consultations now. 1st October 2018 is when the rules ideally should come into effect based on the release that we've just seen. How long do you think it will take for the consultations to take place? By when do you want to complete and finalize the final corporate governance report that needs to be mandated?
I think that is really up to SEBI and us after we receive the comments, in the sense that I think SEBI is calling for comments. They will then obviously give them to us. There's 1 month for comments. Then there'll be a time to digest the comments and for us to see how to fold them in, agree, disagree, etc. So, you know, we've suggested April 18 as a default clause where we haven't put a longer period in that sense.
Okay.
But let's see how soon the regulator takes on board these recommendations. They have to also have their own internal consultation and interministerial consultation. So we'll see.
Ma'am, another query that I had was the audit committee. The couple of points as far as empowering the audit committee, more responsibility to the audit committee, which includes increasing the annual meeting. The audit committee will have to review utilization of loans of more than 100 crore rupees to subsidies from holding companies. What was the thought behind that? Is it essentially giving more empowerment and more responsibility to the audit committee?
No, I think what we thought is that if significant money is pushed down into a subsidiary, then to the extent that it tends to lose oversight, both in terms of its utilization or what happens from there, we felt that these were significant amount of thresholds of 100 crores or 10% of the asset size, such that the parent company, which was the listed company, should, through its auditors, be able to have sight of what was pushed down.
Ma'am, just one quick point, just to go back to the separation of roles. This is, I think, point number 10. It says, with effect from April 1, 2020, all companies with public shareholding of 40% or more shall ensure that the chairperson of the board of such listed entity shall be a non-executive director. That basically implies that the two roles are separate? That's
right.
And
That's
what?
Right.
Okay. And what is the rule? Is there a rule right now? I mean,
no.
There's nothing.
No, there is no rule right now.
Okay. There is another point which says matrix reporting structure.
Sorry, the only rule you need is that if you have the chairman and MD in a combined executive role, then half your board composition has to be of independence. Whereas if your chairman is non-exec, then you lead less independence.
Okay, fair enough.
Yeah.
Got that. The point about point number 11, matrix reporting structure, it says confirmation that board has been responsible for the business and overall affairs of listed entity in the relevant financial year. I mean, is there a mechanism which has been proposed to ensure this?
I think that we basically had a discussion and we didn't want to get too granular into this deliberately because, you know, different companies have different key management personnel reporting either in silos or in verticals or across the board. So the thinking was that at the end of the day, the overall business should be known to the board of directors, and we left it to the company, each company, to frame the way they would be able to carry out this requirement. And what we thought was appropriate was to have the board then confirm that they had been able to put the structure in place, that there was therefore no excessive concentration of authority in one or two key management persons,